welcome to Markets Today. I'm Lata Venkatesh, and joining me from the Delhi News Centre is Surabhi Upadhyay. Well, Surabhi, the big news, of course, was that 9,000 was conquered by the Nifty after coming within touching distance several times. And it was in the backdrop of a global equity markets that was doing very well, with the Nasdaq having scaled 5,000 yesterday, as well the Dow and the S&P also scaling new highs. It was a perfect global setting in which the post-budget rally in India got a little more legs, and it doesn't look as if the bonhomie is over. Hi, Surabhi.
Hi, Lata. You said it, I guess. All the money being printed across the world, irrespective of what the US Fed does, and investors feeling a little enthused with whatever the government is doing here in the budget. And the result was there on the screens today. Let's quickly run through the top stories. Peak 9,000 has been conquered. Markets hit fresh all-time highs as post-budget optimism mingles with global equities rally. The Nifty hits a high of 9,008 before closing at 89.96. Sensex closes around 29,600 with 0.5% gain. Oil and gas, IT and pharma stocks lead the buying.
Mid-caps outperform blue chips, with the mid-cap index rising nearly 0.8%. TVS Motors surges 8% on steady February sales. Hotel Leela rises on reports that it is looking to sell 2 of its hotel properties. Natco spikes almost 9% after receiving a license to manufacture Gilead's hepatitis C drug.
Sun Pharma buys GSK's opiates business in Australia for around $200 million. Analysts see the deal as a positive for Sun Pharma, as margins are supposedly quite higher in the controlled substances business.
The Lok Sabha passes the Mines and Minerals Amendment Bill. If passed by the upper house as well, the bill will pave the way for all mines in the country to be allotted via auctions only. Government also tables the Insurance Laws Amendment Bill in the lower house of Parliament. Stocks like Reliance Capital and Max India rise. Well, those are some of the headlines from the street and attached to the street. And here are the experts that we have lined up on the show for you today. Pankaj Vaish of Citigroup gives us his outlook for the markets post-budget, and Abhay Lajawala of Deutsche Equities will talk not just about the post-budget bonhomie but also about the earnings picture. We'll get you some expert views on global macros from none other than Warren Buffett.
So lots of big opinion coming your way today. Well, let's start first with the day's trading action itself. A historic day on Dalal Street. The bulls seem to be in complete control as markets rose for the 4th straight session, breaking new ground. Anuj Singhal is here with the day's highlights. Anuj, in incremental sense, it was just about a 0.25% to about a 0.5% rally, but nonetheless, some big levels taken out. A landmark day?
Well, historic day for Indian market. The Nifty hitting 9,000 for first time ever. Didn't manage to close above that, just about 5 points shy of that, but still would go down in record books as the day the Nifty hit 9,000. What was interesting today was the stocks that powered the Nifty, Reliance and TCS. And Reliance really was the top contributor after practically not doing anything in this big bull market. Mid-caps continue to outperform in today's trade. Let's talk about some of the stocks then that led the market rally. 3 stocks accounted for all the Nifty gains today, in fact. Reliance was up 4%, TCS was up 4%, and HDFC was up about 2%. So these 3 stocks alone accounted for all the Nifty gains. Aside of that, the market was actually quite flat. PSU banks did well in late trade today. PNB, Bank of Baroda, and outside the index stocks like IDBI Bank, they were all surging in trade. Then a couple of pharma stocks also looked good. Stocks like Cipla, Sun Pharma, Dr. Reddy's Labs, all these stocks were up in today's trade. In terms of losing stocks, Mahindra and Mahindra, auto sales in fact have been a bit weak and stocks have been reacting. Axis Bank was down 2.5%, and there's Tata Motors again from the auto pack down about 1.6%. Axis Bank, of course, seeing some profit booking after spectacular run over the last 2 days. In the mid caps, there was one big run in Tata group of stocks. Really big surge. Tata LXI locked on circuit. Tata Sponge nearly there, and Tata Metallics up about 15%. And some more mid-cap gainers in today's trade included stocks like TVS Motor, HCL Infosystems, and PTC India Financial. So 9,000 is done now, and now the countdown will begin to Sensex 30,000.
Well, you said it, Anuj. It's just about 500 points shy, and that'll mean about a couple of 100 points on the Nifty. It's sometimes a day's job, at the most 2 days. But since 9,000 took tantalizingly long to come, we don't know how long we will have to wait for this 30,000. It didn't seem so long in end Jan. Well, among other stocks that did well, the Bank Nifty was clearly not a contributor. As Anuj also was pointing out, it was more a defensive day with IT and pharma shouldering most of the burden and Reliance coming out and performing. But there were the odd public sector banks which probably will not be that starved of capital that were up and about. IDBI Bank was up 11%, OBC, Orange Bank of Commerce, was up 5.5%. But in the mid-caps, it was actually a motley group that performed very well. TVS has already been alluded to. Jain Irrigation had a very good day. Expectations that both the Pradhan Mantri Gram Sanchai, Krishi Sanchai program, as well as the money available now with the state governments is going to boost the need for irrigation and irrigation-related components, kept Jain Irrigation well irrigated. As well, of course, other defense-related stocks. Gujarat Pipavav was doing well. Separately, Transport Corporation was doing well. So it was a motley group of stocks in the mid-caps that had a good time. It was really a market full of money, full of bullish optimism, and just looking for an excuse to buy one stock or the other.
Well, that was the day gone by. Let's get some opinion and some perspective going on this mega rally. Speaking to CNBC TV 18 from the sidelines of the Citi India Investor Conference, Pankaj Vaish, the MD and head of South Asian markets for Citi, says he's more bullish on the markets post the budget and the rate cut could be the next big trigger.
I was very happy to see the government take the bull by the horns and say, we will do something. I wish it were, frankly, even more money being spent on very specific 20 or 25 projects. But I'm very happy that they've started that between railways, roads, and this new institution that's being set up. Like I said, my count is about $15 billion. Even if it's 25 every year for the next 5 years, I think they'll be very meaningful. And then private sector will come. It's like the American baseball saying, if you build it, they'll come. And I think that's what will follow. You needed somebody to initiate that, and government is in the right position to do it. So our strategist is looking for another 10-11% from here. I think he has a target of 33,000 on the Sensex. And I think at 9,000, you are obviously back to the old highs in the Nifty. From here for it to break out into a new zone would be a very meaningful break. So that probably needs some more fundamental push behind it. Clearly, an RBI rate cut would be that kind of a support. The budget, I think, was medium term very positive. There was no fireworks in it right away to get people, and we had already rallied into the budget. So there's nothing very dramatic in there to say let's bust higher right away.
Right, so quite clearly people looking beyond 9,000. So will the market soar beyond 9,000? We posed that question to veteran trader Ramesh Damani, and he believes that 9,000 is just one of those many milestones in an ongoing bull market in which he has a lot of faith.
This bull market, which began from the depths of depression 18 months ago, was probably inspired by this new government and the politically better decisions that they were making over a period of time. I'm sure the budget helped, but it's probably just a punctuation mark in an ongoing bull market, the 9,000.
All right, now let's move to all the action in the futures and options space. Nigel D'Souza is standing by to tell us what went on there. Nigel?
Well, in fact, the trend for the last few days has been put riding, and today as well, we did see put riders making big money. So the 8,700 put saw the premium fall a good $10. We did see riding at around that 8,800 put. But what's interesting is that the Nifty made the dash towards that 9,000 level, and in the final minutes of trade, we saw quite a bit of riding at around that 9,000 mark. Take a look at the premium over there. It's roughly at around $100. So traders are counting at that 8,900 being the first stop loss for the Nifty. The 9,000 call now has been seeing mix of activity. So those call riders, they were unwinding their positions, while the call buyers as well, they seem to be booking profits, getting out of the market. And we did see some build up at around the 9,300 call. Traders were there telling you that in fact they don't mind using the profits that they made on the 9,000 call, going ahead and buying the 9,300 call for around 35 to around 38 rupees. Individual stocks that were in focus, Ashok Leyland came in for a big short covering bounce in trade today. Take a look at the volumes as well. JP Power as well did see a big short covering bounce in today's trading session. And from the banking space, IDBI Bank, particularly particularly stood out. Big open interest build up. The stock was higher by close to around 10%. L&T Finance Holdings as well has been a bit of an underperformer, but that one did see buying in today's trading session. And Eicher Motors did see selling in today's session, while Voltas, post the big run we have seen in the last few trading sessions, that one came in for some unwinding pressure. Back to you.
Thanks a lot, Nigel. Some important action from the policy space now. The government tabled the insurance bill in the Lok Sabha today. This comes just a day after the Department of Industrial Policy and Promotion, DIPP, operationalized the 49% FDI hike in insurance companies, the one that was activated because of the ordinance. The bill for raising the FDI limit is incidentally still pending in the Rajya Sabha, and the opposition did not allow the government to withdraw it. The bill has been stuck in the Rajya Sabha since 2008 due to lack of consensus.
Moving on, the other big game changer is the Mines and Minerals Development Regulation, or MMDR bill that was passed in the Lok Sabha. The government claims the bill will ease bottlenecks in the sector by giving more power to the centre over states. Let's now hear out what the mining minister had to say.
यह जो विधेयक है, यह विधेयक पारदर्शिता बढ़ाने वाला है। यह विधेयक खनन के कार्य को गति देने वाला है। यह विधेयक रोजगार के अवसरों को सृजित करने वाला है। यह विधेयक विवेकाधिकार को समाप्त करने वाला है। यह विधेयक देश की अर्थव्यवस्था को बढ़ाने में मदद करने वाला है। इसलिए इस विधेयक को पारित करने की कृपा करें।
And here's the latest in the probe into the NSEL scam. The Economic Offences Wing of the Mumbai Police has cracked the whip on some top stock market brokers as well. These include Amit Rathi, the Managing Director of Anand Rathi, Chintan Modi, the Vice President of IIFL, and CP Krishnan, the whole-time Director of Geojit Fintrade. CNBC TV 18 also learns that the Economic Offences Wing has directed Financial Technologies to refrain from using the company's funds. It has been asked to use funds only to pay statutory dues and wages.
All right, some regulatory action there coming in. Let's move on and get your big global voice now. Billionaire investor Warren Buffett says the global economy is recovering on a modest path. Let's listen in.
Since the fall of 2009, the economy's just kept coming back at a moderate pace. And people occasionally get very excited and they think it's going to spurt much faster. Sometimes they get worried and say it's going to be a double dip. And I've been listening to all of that now. It's 5.5 years, and it just keeps improving at a modest pace, and we see it in virtually all of our businesses.
All right, now that's a big voice you cannot ignore. Time for a break, though. Coming up, more market perspective and some trading strategies for you.